Hello, everyone. Thank you, everyone, for attending today. We're going to wait 1 or 2 more minutes so everyone else can join us. Please feel free to write down in the chat box where you're from and from where you're watching us so we get to know you better. And thank you again, everyone, for attending today. We expect a great webinar. And we have these two amazing ladies with us today, Jen Perez and Valerie Janz, talking about new year, new financing solutions for sellers, investors, and buyers. And we're super happy to have you all here. So if you want to ask anything related to this topic during the presentation, please feel free to use the chat box and the Q&A box to let them know all your concerns. So thank you, Brianna, for letting us know. So we have people from St. Augustine, Florida. We are happy to have you here. And we are Real Estate IQ. Your deal is our mission. And we are Dream Maker and Deal Maker. And we provide the best real estate solutions, committed to help one more person to win. So make your deals come true. This is a streamlined solutions, your deal making process. So these are the solutions that we provide. We offer off-market leads. So we provide daily updated leads, Monday to Friday, of motivated sellers to contact, get the freshest data mined straight from the card houses. So we also have EVA CMA, run real estate comps in seconds. With our renewed CMA, you can check each property's data, select the ones to compare, and get reports instantly. We also offer custom leads mining. So if you're looking for a specific area leads, look no further. We now provide custom off-market data mining all over 50 states. We also offer virtual assistants. So one solution for administrative tasks, customer service, and technical support to grow your business. So let's work together toward your success. And if you're looking for more, please try our exclusive membership. These are our social media accounts where you can follow us as well. We are in Instagram, Facebook, LinkedIn, and YouTube, and you can use the QR codes that appear below of each icon so you can join us in our community. And you can also join us in our newsletter by scanning the QR code that appears on the right side of the screen, so you don't miss any of our weekly webinars and in-person events. Sorry. You can also get a free 30-minute in-depth consultation of Real Estate IQ's services with one of our experts. Feel free to schedule it now by scanning the QR code or texting bracenet@realestateIQ.com and also answering the poll that should appear on your screen. This is a very short video of what we do. Okay, so before moving forward with Jen and Valerie, we are gonna move forward with Brandon from our sales team, that he's gonna do a short demonstration of our portal. Thank you again, everyone, for attending today.
Thank you, Marie. Hey, everybody. This is Brandon from Real Estate IQ. I'm just going to do a quick demonstration for the off-market leads that we have and the data that we prepare for you. So let me just share my screen real quickly. Can you see there, Marie?
Perfect.
Wonderful. So Real Estate IQ is a lead generation and solutions company. We focus on helping real estate investors find deals faster. Your deal would be our mission. So part of our catalogs, our solutions, we have off-market leads, skip tracing, custom lead mining, virtual assistants, and evaluations, CMAs. Now, today I'm just going to show you real quickly our portal and the data that comes along. What are the off-market leads directly? It would be a daily list of motivated sellers that you can contact. You can use this off-market leads to improve your lead generation process, marketing, etc. So you will have access to the portal, which is this one. If you go to off-market leads, here is where you will be seeing the complete data. So we have a regular and a premium version for the off-market leads. The only difference is that the premium version already includes the skip tracing information. As you can see here on the portal, you will have access to all of the leads that you can see on top of it. Pre-foreclosures, probate, heirships, tax sales, evictions, divorce, loan modifications, appointment of substitute trustee, list pendants, notice of default, code violations, and delinquent taxes. Now, today, I'm just going to take real quickly pre-foreclosures as an example. As you can see on this screen, you can search by search by criteria. You can filter your searches by state, city, or county. If you open over here, you will be able to filter even further. Property characteristics, evaluations and equity. You can also go down here, filter by date filed, occupancy, etc. Now, going back, once we get our results, I'm going to take this one as an example so we can see what information is provided. You will have the property address, property city, state, financial information, estimated equity, equity percentage or appraised value. And if you go into details, you will be able to see the complete information of the property, auction date, recorded date, all the mortgagors information, property, address. You will also get full financial information, estimated equity, unpaid balance. Basically, everything that you see on the screen, you will have access to per lead. So you will get loan information, ownership information, and if you're in the premium plan, you will get on-demand skip tracing service already included, which is this one that you can see over here. So that will be it for me. If you guys are interested into a one-on-one consultation, you can just answer the poll that will be appearing, and we're going to get back to you as soon as possible. So thank you so much for your attention. Maria, back to you.
Thank you, Brandon, for your time and this amazing demonstration. We're moving forward with Jen and Valerie. Thank you, everyone, for attending today. Feel free to ask them all the questions that you may have.
Hey, everyone. Thanks for joining. We're going to share our screen. Here we go. Is the screen showing okay?
Yes, perfect.
Okay, great. Thank you so much for joining us. I'm Jen and this is Valerie.
Hi.
We are two of the partners in the Owner Finance Company. Our company was founded in 2019 and we found this company as a solution for buyers, for realtors, for investors, and for ourselves as investors to try to find a win-win situation for alternative financing. So we'll dive into the presentation today. Here's just kind of an overview of the things we're going to be going over. Like I said, those are the types of people that we work with. Some of the topics we're going to cover are going to be across the board. So typically our presentations are just geared towards our realtors and our buyers. This one, we're going to be talking a lot more towards our investors as well and how it all ties together. And so we'll talk a little bit about the programs that we offer on the investor side and services for both the buyers and the investors and how that affects sellers and realtors. And then we'll also discuss just some creative financing and then how our normal program works. And then also some new programs that we've come up with just in this ever-changing market to help with some of that. If you have any questions, please drop them in the chat box and then we'll get to them either in the next slide or at the end. We're also going to open it up for questions.
We also just wanted to discuss a few of the industry challenges that we're seeing, us personally as investors and also our other investors, realtors that work with investors, just a lot of things happening in the market right now and the stuff that we're trying to combat through our programs to help out our investors and our realtors, just everybody across the board. But a lot of the things that we're seeing is just no payments being made by tenants. A lot of that is due to the increase in taxes and insurance. I'm sure you guys as investors out there have, seen it across the board as well. It's skyrocketed, both taxes and insurance, especially across the state of Texas here for us. So that has really affected, our buyers and our tenants and those monthly payments that they're making. Foreclosures have gone up. That's been a good thing for some investors, people are able to get those foreclosures and they can turn around and get people into them at a lower down payment. So that has also been somewhat of a good thing, but it obviously is very hard on all these buyers when there's such a high rate of foreclosures. So combating that and trying to help buyers not foreclose. Hard money loan payments, we've seen a lot of investors just not be able to pay the extensions and have a hard time trying to get out of their hard money loans. So we're going to discuss a few ways of how we could help any investors in those situations needing to get out of their hard money loans. And then, of course, just high interest rates, holding costs whenever you do have foreclosures or buyers or tenants that aren't paying. It's just very high across the board right now for that as well. And then, of course, just inflation in general. So these are just some of the things that we're seeing and the programs that we're creating and what we're trying to do to help out these challenges.
So here's our program for realtors that are out on this call and any buyers and also sellers. So this is going to be the side of the program where we help the buyers, and these are the deals that we're bringing to our investors. So we're going to start with the buyer side. So if there's any confusion, I'll just kind of repeat that as we go through each slide so you know who we're talking to. So our program is for people on the buyer side who can't qualify for traditional financing. Now that could be for a number of reasons that we've seen out there. It could be bad credit, no credit, foreign nationals. Self-employed is probably our biggest one. We have so many people from, doctors to influencers, YouTubers who, they don't have W-2s and they cannot get financing from a traditional bank. So that's where we come in. And some of the perks of using our program is that our buyers can pick any home they want in the state of Texas. So on the investor side, you don't have to worry about finding the home. The buyer is picking the home they want. We work with new builds. We work with any home as long as it's not below 200,000 and it's in the state of Texas. So that is such an advantage for our buyers. They can pick any school district they want, and it really, gives them some buying power when they're out there with their pre-approval to pick any home they want. We do not raise the purchase price of the house, so whatever is negotiated by the realtors with their buyers is exactly what we sell it back to them for. The deed is given to the buyer the day that we close and recorded within 30 days. So they are true homeowners, can file for homestead right away and take advantage of a lot of those tax advantages. It's pretty simple to get pre-approved with us. We don't have any application fees. We only require 3 things, which is a valid ID or passport from any country. And that's to make sure at closing that the notary is able to verify who they are. Proof of funds, which is 30%. We're going to break that down on the next slide for you so you can easily know if your buyer is qualified by multiplying the purchase price times 30%, and that should cover them for down payment, closing costs, and our loan origination. And then our application filled out and submitted. Our application can be found online at theownerfinancecompany.com under forms and applications. They can fill it out there and submit it online, or they can download it and they can, manually fill it out and scan it to us. Whatever's easier for them. We do have it in English and in Spanish. So that's another thing about our company from beginning to end, whether we're working with investors or buyers, realtors, our entire team from start to finish is bilingual. So if you have any Spanish speaking buyers, we can definitely help them.
So here are our terms, rate, and fees for our program for our buyers. basically what they need to be able to purchase a home through us is 30% of the purchase price of the home. And here's a breakdown just of what that covers. On a $200,000 home, 20% is going to be the down payment. Sometimes there's people who may want to do a little bit more. If it's a home over $1 million, we may require 25%, but our general program is going to be 20% toward that down payment. So they'll be obtaining an 80% loan with us. And then we charge a 5% owner finance company loan origination fee. Those two never change. The down payment and the loan origination are not going to change throughout their entire loan process. The only thing that could change is that 5% estimated closing costs, which makes up the rest of that 30% right there. We used to estimate the closing cost at about 3%, but with the taxes and insurance going so high just this past year, we had to raise that up to the 5%. So it's pretty easy, 30% across the board to find out what they need to have to see if they're going to be able to qualify just monetarily. That 5% is a very good estimation. We do give a more clear estimation as they get a loan estimate and whatnot, but that'll be the only portion of that 30% down that might change throughout the loan process. So if they just have 30% total proof of funds, we can get them pre-approved. All they need to show us is their current proof of funds. They don't need to be seasoned or sourced, and we can typically get a pre-approval letter basically same day. For our terms, right now we are at 11.9%, 30-year fixed. Those are all of our loans across the board. We don't change any of that, regardless of their credit score, or having credit or no credit, or their down payment amount or anything. It's just all of our notes are going to be 11.9% 30-year fixed. We do not have any prepayment penalties, no balloon payments, anything like that. So it's basically, in the eyes of the end buyer, it's going to be a conventional loan with us. So that's great for them, that they're not going to have to stick to any of the balloon payments or anything like that. A lot of other owner financing companies, that's, a real struggle for the buyers is, they have these huge prepayment penalties or balloon payments. So that's something that we're really happy to offer for our program. And then again, just that 5% loan origination, that's basically our flat fee across the board for them to use our program.
So here's a quick buyer process overview. Typically, the buyer presentation, we go into really deep detail, but we also have monthly realtor events at our office. The next one's on the 17th. So if you want a step by step, we can definitely send that out and get you guys the link for that event coming up. But just a quick overview of our buyers process. So we take over helping with everything on the buyers and realtor side and on the investor side. So we're talking appraisal, surveys, insurance, the contracts, making sure the RMLO paperwork is in place. I want to hit on that just for a minute on the RMLO. For those of you who aren't familiar with an RMLO, it's a residential mortgage loan originator. And starting last year in January, the Senate passed a bill that requires, if you've done 3 owner financing transactions after that, you have to have an RMLO review the file. What their job is to gather as much information that they can from these buyers to make sure that they can make the monthly payment. So it doesn't matter if they don't have their taxes filed. It doesn't matter if they don't have W-2s. If we can, we can get very creative with where their funds come from. Some of them get paid in cash. So we, as long as we can have a letter of explanation from their employer that's notarized, we can take that. So when it comes to, am I going to be able to, qualify for this house, they get a little nervous, our buyers do during the RMLO process. But the most important thing to keep in mind is, are they going to be able to make the monthly payment? That is what we're looking at. We want to make sure we're setting them up for success. So with insurance as high as it is and taxes as high as they are, we send them, the RMLO sends them all the disclosures that are required so that they know from the get-go what their tax rate is, what their interest rate is, and a very, very, very close estimate of what their final closing disclosure is going to look like. So in regards to how our process works, it mirrors the traditional process. We just don't, our underwriter is basically us. And if you can show that you can make the monthly payment, we will move forward with the loan. So for the buyer side, all of that is taken care of. And if you're a realtor, you're CC'd on every step of the way, and our lender sends out a weekly update on where we're at with every step, with the insurance, with the appraisals, with surveys, if they need to be ordered, with all of it. So everyone stays extremely involved. And then we also take care of closing and post-close servicing. So we will close at our attorney's office. By law, we have to close at either an attorney's office or at a title company. So we close at our attorney's office with our notary, who's also bilingual. And then that's where they get their loan setup paperwork. And they'll work with a loan servicer post-closing. So if your buyers want to put more money down towards principal, they can do that with their loan servicer. If they're refinancing and need a request to pay off, they can do that with their loan servicer. So that's who is going to send out their first mortgage statement, their first payment letter, and their contact post-closing with us. We're always available for questions if the buyers have any, but most of those questions are going to be answered by their loan servicer. So just flipping over to the 2 to 3 closes that take place. We keep a lot of deals in-house. So, sometimes we send them out to investors and sometimes we keep them in-house. It just depends on the deal itself. If we do work with an investor, what happens is the investor purchases the house. So what we'll do is we will transfer that contract that your buyer has into one of our investors' names. And our investors are all pre-approved. They all have, they're accredited. Most of them are repeat investors who have done deals with us before. Some of them are brand new, but they're pre-approved. So when you're talking to the listing agents, or if you are a listing agent on here, when we hand you those pre-approvals, we wanted you to know that, your buyer who's going to be living in the house is not the same person who's going to be purchasing the house. So just want to make sure there's full transparency there so that the listing agents know they're getting a very qualified buyer. So in that case, the investor takes over that contract and purchases the house. The seller and the realtors get paid at that first closing once the transaction is funded. And then the very same day, the investor sells the property to us. Now, this is why we stay in the middle. So for the investors out there that are watching, we want to handle all of it. So we don't want you to have to deal with any of the portfolio management. So we deal with the loan servicer, we deal with collecting the payments, we deal with paying the underlying mortgage on that because the investor will hold a lien from that first closing. So the investor sells it to us. So now we're liable to make the payments to the investor, whether or not the buyer pays. So we could be going through a foreclosure with the buyer and the investor is never affected and never knows at all, really, because their cash flow never stops because their contracts with us. So that's one way of keeping your money secure and safe and consistent with the payments that you're receiving, is knowing that that's guaranteed by our company and not reliant on the end buyer. So after we take possession of the house, the very next day we sell it to your buyer, and that's where they come to our attorney's office and sign all their closing paperwork. They'll get the deed of trust, the warranty deed, and all that's recorded. So they are the true owners, and then there'll be a couple of liens on the property. As you can see, there'll be the lien for the investor, and then there'll be a lien for the underlying mortgage. So if there's any confusion on those 3 closes, feel free.
Everyone through the process, from the investor to you guys as realtors and to the end buyers. So one thing to keep in mind, we do realize that our program is very creative financing, and so we do make sure to really walk everybody through that and have daily communication with exactly what's going on. So like Jen was saying, this we're now going into the investor side. So the last 2 slides we just covered, that's the buyer and realtor side. That's everything that we usually speak to the realtors and brokerage firms about. So if you guys are any realtors on here, that's for if you have a buyer that needs financing and is not able to qualify. This is now moving into the investor portion of our program. So we have the end buyer side and then we have the investor portion. A lot of our loans, the way that we facilitate these loans for our end buyers is through our investors. So we work with investors. One of the great things with our investors, I think there's some people from around the whole country on here. You do not have to live in the state of Texas to be an investor with our program. We've got investors all over. So just know that our houses are always going to be in Texas, but for the investor side, you as an investor don't have to be located in Texas. But this was just a breakdown of what it looks like for our investors. So if you're an investor looking for passive residual income, our program may be something that's suitable for you. This has been a program good for investors who've got rentals that may not be as consistent, investors who've got multifamily or doing other larger, maybe commercial investments. Our investors tell us that this is a great addition to their portfolio because it's very just consistent cash flow that you know you're going to be receiving every month. So our investors come to us looking for passive residual income. What our investors are leveraging is their ability to qualify for the loan. That's really what our investors are bringing to the table, is your ability to be able to qualify for a loan with a lender and purchase a home. So you would get pre-qualified with the lender. We have a preferred one we work really closely with. If you'd like to use ours, you can. If you're interested after this, just get with us and we can talk to you more about the investor side and connect you. But when you have an investor, we get a deal, we get a contract from an end buyer in-house, we put it in this format, and this is what we send out to our investors to see if they're interested in the deal. We break down the address. Some of our investors like to look it up. We typically never even see the houses because all of that due diligence is going to be done on the buyer's side. But this is what we send out. So we've got the address on there, the listing price, which is that $314,922. The only part of the deal that our investors are going to bring to the table, aside from their ability to qualify for getting the loan, is the loan origination. And that's basically the cost that you have to pay to get the loan with the lender that you're going to be using to purchase the property. And we typically estimate that at 2%. So that's that $6,298. So that would be the amount that you as an investor would be bringing to the table. So $314,000 house, you'd be bringing about $6,300 to the table. This first investor loan amount with lender, that would be the loan that you were getting to purchase the house from the lender that you are working with. So you'd be getting an 80% loan. So as an investor, you do also have to qualify on your own to show that you have that 20% reserves. And then you're able to get the 80% loan. We do end up giving you that 20% the day of closing since we're purchasing the home from you, but you have to show that ability to be able to qualify completely on your own for that 80% loan. So you'd be getting an 80% loan. This is a deal we actually have right now. The investor locked in at 7.49% interest rate. That's about standard for what we're getting right now. Really anywhere between 7.5 to 8.5. Just depending on if you're doing it through an LLC. A lot of our investors go under LLCs, but this particular investor locked in at 7.49%. So that's going to be the loan that they are obtaining to purchase the home. So their monthly mortgage payment is going to be that $1,759.86. And then skip down. When we do that second closing and the investor sells the property to the owner finance company, this is the loan that we are basically obtaining as the owner finance company from our investor. So this is the loan amount that when you sell us the home in that second closing, you'd be selling it to us at. The same 80% amount, so that same LTV, and then we're purchasing it from you at 11% interest rate. So that's how our investors are making their rates of return. And that total monthly cash flow is just the difference between those mortgage payments. So basically our investors are making the difference in the interest rates. And that's how we are able to provide our investors with that monthly passive residual cash flow. Check if there's questions maybe. Oops.
I don't know if there's questions, guys, because I can't see.
Oh,
Okay, we'll just wait till it pops up. So let's say you don't, so what she just discussed was being an investor with the owner finance company, the traditional way that we do it. Buyer finds the home, investor buys it, sells it to us, and then we sell it to the end buyer. Well, if you want to hold the note yourself and cut out the owner finance company, so let's say you wanna deal directly with the loan servicer, you wanna deal directly with the buyer, what we do is make sure that we help you in structuring your deal. If maybe you want to maybe you had a house that's been sitting there and you need to move it. Maybe you can take smaller down payment. We'll show you how to do that. You want to stay compliant. That's one of the biggest things, is that in our state, the buyers are going to typically win any lawsuit that they go into unless you have your ducks in a row and all of your documents showing that you're compliant and that you weren't trying to, take advantage of the buyers. So we're gonna help you stay compliant with the state and federal guidelines. We've been doing this for over 4 years now. And so as the laws have changed, we have changed with them, and everything that we do is compliant with the state. So we just wanna make it a point that you guys know how important that is, when push comes to shove and your buyers are behind on payments. All those things are really gonna help come into play in your favor if you did it correctly. If the buyer defaults on their payments, in this scenario, you would be responsible for those holding costs. If you worked with our program, we take care of all that, but that's just one thing to consider. We also can talk to you guys about second notes. In the next slide, I think will be a better example to talk to you about that. But let's just say you want to sell your property that you haven't been able to move, and you want to do it through our program. So let's go back to saying you have the buyer go through our program. Well, we require 20% down. Let's say they only have 15. Well, do you have 5%? Because if you have 5%, you can take a second note to cover that. And then you'll be making cash flow on that second note at whatever interest rate you want. We also help with structuring that for you. We have some software that we can pop in numbers and see what the best return is going to be for you on your money if you're open and available and have capital to do a second note. Sometimes for our buyers, life happens and they've come up short at the closing table, $2,000-$3,000 at times. And we take on second notes, and some of them are just for a year, some of them are for 2 years. So it just depends on the situation, but we help you understand how a second note works. That also gets set up with the loan servicer. So along with our note, we will help you set that second note up with the loan servicer that you're responsible for. And, this is truly just a way to teach our investors about passive residual income. We're investors, our other partners and investors. So we all invest in these deals in the company. So when we hold them in-house, either the owner finance company is buying the houses or it's one of us for our personal portfolios. So this is what we do to help you if you want to hold the note. So first of all, deal structuring. That's going to be just the bones of exactly what the interest rate's going to be, what your terms are going to be. If you can have a 30-year, you can do a 40-year note. It's up to you as the seller. So we'll walk you through multiple scenarios as far as down payments, if you want to charge a loan origination fee, if you don't. Knowing your buyer, typically when we work with sellers, that it's their rentals where they had someone living in their house for say 5 years and they're ready to buy, but they don't qualify. So now they're coming to us and saying, hey, we want to do it, but we want to hold a note. These guys always pay. We're not worried about that. And so we help you to figure out what your cash flow can be based on how much you owe on the house, what interest rate you got it at. And if you bought your house, a few years ago and you have a 2%, 3% rate, you can make, a very generous cash flow at even say 8% to the buyer. You don't have to go as high as 10 or 11. like companies do, like we do. So we'll play with the numbers with you, and the deal structuring that's kind of a fun part for us. We enjoy doing that. And it's just great to educate you guys on all the different ways that you can create the exact cash flow amount that you're looking for based on what your situation is. We will also help with marketing. So the property will be listed on our website, all of our social media outlets. Of course, we'll do weekly posts, stories. If you're having open houses, we'll do open house countdowns for you. The one thing we do not do is list the property on the MLS. So that is the responsibility of the seller. If they want to list it, they may be able to, just between their own personal marketing and our marketing, get it sold. People are always looking for lower down payments. And so you have a really huge advantage if you are wanting to sell or finance on your own, because 20% is a lot when you're looking again at these super high insurance and taxes. So if you don't want to list it on the MLS, you don't have to. You could simply do a sign in the yard saying owner financing available, and you'd be surprised how many leads you'd get just off of that with lower down payments. We talked a bit about the RMLO on the buyer side. This is also something that we provide for you. So everything that we do is what we're going to help structure for you. So we're going to do an introduction to you. We use NRTD services. They provide us with a full underwriting package with all the disclosures and state and federal guideline compliance paperwork that we have to have for the investor and for the buyer, all the lien disclosures, their amortization schedules. So, I mean, the RMLO provides everything. And that's given to you in a full package so that you did your due diligence on the buyer. That's the most important part, I would say, of this entire thing is the RMLO. And we supply you with one. Insurance, we use Goosehead, and the reason that we use them is a specific team. They have vetted the carriers that cover the owner financing arrangement, which is such a big deal. When your buyers are calling in to file claims, we want to make sure that they can call themselves. The investor, we don't want our investors dealing with that at all. So Goosehead has, this took us a while to, get everything lined out to where all the lien holders were covered. The buyer had the ability to call in. There was no issues as far as filing claims. And so the team we do your deed of trust, your promissory note. We'll handle the contracts, which is, we just call it a real estate sales contract. And that's signed between you and the buyer. We'll also provide the notary and, am I missing anything there? And the promissory note. So everything that it's a pretty thick package at the end of it all, but as far as the attorney doc prep, that's all provided for you. And then the loan servicer, we use SecureNet. We've used them since the conception of our company. So they're extremely familiar with our process and how we set the loans up and how it works as far as escrowing for taxes and insurance. They can either send you the money and then you can pay it to your underlying mortgage company, or if you're working with us, that's something we would do, or they can hold it, and at the end of the year or beginning of the year, they'll make those payments for the insurance renewals and for the taxes on the property. So that's your choice how you want to set that up, but we'll give you both options and walk you through what we recommend for your particular situation. Now, the fee structure for this service where you take us out of the middle is $5,000, and that's to facilitate everything I just discussed, and that's paid the day of closing. We can also help you understand how to roll that $5,000 into where the buyer pays for it. So, for example, our loan origination is 5%. So let's say you charge a $5,000 loan origination fee, that automatically would be paid for. So this would be, you'd be getting a free service once you have it rolled into the buyers. And that's all part of the deal structuring, and we'll help you with that if you're interested. But the fee for the services, this is something new We weren't originally offering this to our investors, but when we realized some of the investors wanted to hold the notes, we thought, well, why not? So as long as they're compliant and we can help them and make sure that it's done correctly, we decided we wanted to, you know, do whatever was in their best interest. So this is a new program, and if anyone's interested, it's $5,000, and we keep you compliant and walk you through it step by step. There's a question. Jerome, Kansas City, Missouri. Hi, Jerome. Referral specialist reaching out to business owners and might be looking for alternative funding after they have tried getting funding through additional options that they offer today. Can I let's do real estate?
We'll get with you, Jerome, after we can get with you after the presentation on that.
Okay, so here's a breakdown of terms. Let's say you are doing it yourself. So let's say, so you could close in 10 days. Whenever, if you're doing it on your own and you already own the property and you don't have to you have permanent financing. This is assuming you have permanent financing on the property. Then our RMLO will take about 10 days to close, assuming your buyer gives them all the documents on time. Still have to follow that 7-day mandatory period and then 3-day waiting period from when the prelim is issued. So everything mirrors the traditional process. Still, even in this case. Here's a situation that we had with a seller who wanted to do financing on their own. It was a $248,000 purchase price for their property. Their loan amount with their lender was $176,000. They had an interest rate of 6.25, so not super low, but still plenty of room to make some cash flow. And then you can see what their monthly payment to their mortgage company was. So then they turned around and they did an 85% loan to value, that's LTV, so 15% down to their buyer, which is great. That's lower than 20%. It's a lot of savings for the buyer. So there's a huge incentive there. So they amortize that over 30 years. So the loan amount to their buyer was $210,000. So you can see there's a huge difference between those loan amounts. So he's already leveraging the difference of the loan amounts there. At an interest rate of 10.8 with no prepayment penalty. So 10.8 allows him to make a cash flow of almost $900 a month. So that's, you know, that's great.
And keep in mind, one of the things, if you are doing this on your own from that seller perspective, that 15% down, that's basically going into your pocket. If you already have that permanent financing on the house, then whatever down payment you're willing to take, in this case, it was the 15%. I mean, that's going directly to you as the seller. So it's great because you can get a lump sum if you need one, if you want one, whatever you may need it for, and then you can turn around and make that monthly cash flow. So that's really the biggest benefit, and where we can help you structure that deal on what you need or want that loan amount to be to your buyer based on your own situation. You know, if you had a fix and flip, you know, maybe you need to recoup some of those expenses on your fix and flip. So we really can just sit down and individualize with each investor, you know, what might be the best deal structure for a buyer that you're looking for.
Some investors may even take that 15% down and put it towards their loan amount with their lender so that they can have, you know, even more leverage, having a much lower loan amount. So people can just kind of, like she said, play with it and see like what you need that money for and how far down you could go. We have a partner who goes as low as 10% down on some houses, or doesn't even do it as a percentage. Say you just need 30,000 or you just need 25,000. So it's going to be, again, based on your needs. This is our team. That's Mark. He's one of our other partners. He does do quite a bit of real estate transactions. He, you know, he's been in all the realms of real estate, from wholesaling to fix and flips to commercial properties, to hotels, to you know, starting neighborhood development. So he's also a great
resource for
He's
you.
a tremendous resource for you as an investor. If you have questions or just want to get creative, we do more of strictly the owner financing, but if you have deals, he's always open to listening to them. So please don't hesitate to reach out to us for anything. Those are our transaction coordinators, Sydney and Janelli, both bilingual. I put their contact information on there in case you have specific questions. They can send you some information for the buyers if you're a realtor. If you are looking to see where we're at and what we're doing, you can go to our website, theownerfinancecompany.com, and we will always have all of the following monthly events listed there. We sponsor quite a few events and we do a lot of speaking engagements, so stay involved on our social media to see, what we have coming up. And again, we do the monthly training. It's always mid-month for the realtors, if you're interested in coming to that. And then we typically do an investor training, just all investor scenarios and different kinds of deal structuring about once a quarter. If you want a one-on-one with us as an investor or realtor, please let us know. And if you have a brokerage, this is a great program, because anybody in your team, if they use this, we do pay $1,000 referral fee as long as you're not the realtor receiving commission on the deal. So for a broker, that's great. You can get $1,000 for every deal that, one of your agents closes, or if you want it sent to a charity of your choice, whatever you want, we do pay $1,000. And that's across the board. For if you send us a buyer and you're not involved at all in a transaction, then you get $1,000. And that's for every deal that they do. So we do have a lot of repeat customers on the investor and buyer side, especially for foreign national buyers. Their families start buying homes. And so we continue to do the referral for whoever sent that original one. So we pay $1,000 for investors and for buyers. Please keep that in mind.
So thank you guys so much for listening. We will definitely be getting a list of all of your emails from Real Estate IQ, and we'll send you guys just an intro email with a little bit of information. If you have any further questions outside of that, then please let us know. We'd love to connect with each and every one of you and are here to help.
Oh, wait.
In the chalk.
Okay, Greg is saying, with loan rates at 11 to 12%, how many of the percentage of the M buyers refinance within a year to a third-party loan provider? With no prepayment penalty, this will cut short the cash flow to the investor.
That's correct. However, they don't within a year or two. Most of our buyers, they're already in situations that they are not going to be able to refi. Overall, in the 4 years that we've been in business, we've had about
You are muted.
We got cut off. I'm glad you guys are still there. I'm not sure what happened. Our internet's a little spotty, but I think you left off at paying.
Yeah, paying the investor back. So to answer your question, it's a very low rate of buyers who actually do refi or pay, even with that no prepayment penalty. Again, most of them are just already in situations that they are aware. I mean, we're basically already a last resort for a lot of our buyers. But there is a small percentage, like I said, it's right around that 5%. It doesn't typically happen. We haven't had it happen in a year or the earliest has been right at that 2-year mark. And again, we did just work with our investor to make sure that, you know, the whole entire investment was a win-win, you know, regarding all the monthly cash flows that he had received up to that point. So, and just a little bit of information on that.
I don't see any more questions. Wait, here we go, we have one. Jonathan, I have a buyer that only has $8,000 to put down for a $200,000 house with terrible credit. Jonathan, is that something that you would want to do a seller note on, where you hold the note? If so, I would be very weary. What we found is the lower the down payment, the more likely the defaults might happen. 200,000 is on the lowest end of the houses that we purchase for our buyers, and we require a $10,000 deposit just to move forward with the deal. That of course goes towards their closing costs, but anything less, I would say that 8,000 for us, we would not take that on any property, even one we've had to take back where we can take a lower down payment. 8,000 just seems to be,
Yeah,
it doesn't make me feel confident that the buyer is people are willing to walk away from a little bit of money, but they're not willing to walk away from a lot of money. And you'd be surprised how many people would walk away from 8,000. So,
however, I do want to let you know that on questions like this, or if you have situations like this, please always reach out to us. This is something that we would run by our partner, Mark. He does do a lot of other owner financing on his own. He could have a house that he'd be willing to do that on. Sometimes it can just depend on situations. So we can pass you along to him as well. And if you do have any situations like this, please do reach out to us, because we have a lot of resources and we want to be able to pass along those resources to you guys as well. So if you want to email us after this, we can put you in contact with our partner just to see if he has anything available that he could do right now with that.
I'm going to put my email in the chat. Make sure I spelled it right. It's just jen@theownerfinancecompany.com, and then Valerie's is the same, Valerie@theownerfinancecompany.com. So if you guys want to get with either one of us afterwards, feel free. And if we don't have any other questions, we just want to say thank you to Real Estate IQ, of course, for having us. And also to everyone who joined. We love educating about passive residual income, opportunities for buyers and for realtors. So please reach out if you need any help with any of your situations. We'd be happy to help you.
Thank you.
Ladies, it was amazing. Thank you very, very much for your participation. We really learned about this amazing webinar as always, and we expect to see you again in future ones. Have a wonderful week.
Happy New
Happy New
Year.
Year.
Happy New Year. Thank you. Bye-bye.